Welcome to GP Bullhound's Tech Thoughts. Today is the 25th of February, and we are here with Inge Heydorn and Nejla-Selma for our weekly market roundup. Today, they will give an update on software and gaming. Over to them.
Really a week of sadness given what's going on in Ukraine. So not easy to focus on technology and what's happening in the technology markets at this point. But I'll give you some roundup anyway on what's going on. And if we look at the results season, it's starting to come to an end. Though it's only one big really company, which is interesting now for us still, and it's Salesforce. And the key thing to focus there for us is going to be how much are the MuleSoft still dragging on the top line, and are we seeing any signs of turnaround in MuleSoft? On top of that, we're probably going to see more positive signs of the integration of Slack and how well that is playing into Salesforce, general Salesforce, and also the synergies they have on that. On top of that, it's quite interesting now. We have two different sectors. We have software, where I would say the expectation has gone up quite a lot. So if you show any signs of weakness, you're getting hammered. So Monday.com, Marine Software really had tough times this week, given that they had some weakness in the reports, and especially on the earnings side. And if you don't really see the full leverage, investors are getting afraid now. So top line is there, but if you see some weakness on the earnings, then you're getting really hammered, and that you didn't used to be the case really. On the other hand, if we turn around, you have the e-commerce side, where I would say expectations come down heavily given what we saw with PayPal, Shopify. So Farfetch results yesterday, they were good, and the expectations for 2022 is slightly higher in the market, and the stock indicates up almost 30%. And even Etsy, which I would say Q4 was fine, Q1 guidance not great, but not bad, and the stock is still indicating up 13%. So there we have two different sides. Really, software expectations gone up quite a lot, while you have e-commerce where expectations gone down quite a lot. On top of that, what more do we have in news flow? We have the Playtika story, which Nejla is talking about in a few seconds here. And we also have, on the semi side, some more data around what's going on. And the interesting thing now is that we have the CHIPS Act in the US, we have a European CHIPS Act, and we now have an Indian CHIPS Act for India, and they have 3 factories coming out now with total subsidies around 6 billion, so total building of 15 billion. So quite a lot of money, and not a high end, but still quite a lot of money. But the key thing we heard this week was the UMC build out of a new factory in Singapore, and that's going to be quite substantial. It's a 5 billion investment coming live in 2024. So installments second half of 2023, clearly helping the market for next year also for the same capital equipment names. So over to Nejla, talking about Activision and Playtika. Thank you very much.
Okay, so let's do a quick gaming update then, and let's start off by a quick update on mobile gaming. For the third month, PUBG Mobile retained its position in January 2022 as the highest grossing mobile game across the App Store and Google Play. Overall, for the month, the global mobile games market generated around $7.4 billion, which is a decrease of approximately 7% year over year. So not looking great this month, I would say. Going over to Activision, 2023 will be the first year we will not see a mainline release in 2 decades in the Call of Duty team, which will help with the free-to-play game. But I'm still a little bit surprised that they would sacrifice a big portion of their annual revenue to do this new version of Call of Duty. I mean, even though Vanguard was not a successful release in terms of Call of Duty, I mean, it was still the best-selling game in 2022, around 18 to 20 million units sold. So yeah, this is going to be really interesting. Going over to Playtika, who delivered earnings and revenue surprises for the quarter ended December 2021. This quarterly report represents an earnings surprise of 38.89%. A quarter ago, it was expected that this mobile game developer would post earnings of 0.27 per share when it actually produced earnings of 0.20. Over the last 4 quarters, the company has surpassed consensus EPS estimates just once. The company has topped consensus revenue estimates 3 times over the last 4 quarters. And the shares raised more than 15% after the company said it's exploring strategic options. So might be alternatives, including a sale. We'll see. Thank you for today and see you next week.